Good morning and welcome back. Wall Street investors could benefit from a phenomenon known as the Santa Claus Rally. It's a big opportunity to invest. Joining us this morning is Stewart Fields with Open Air Advisors. Good morning to you, Stewart.
Good morning, Cleo.
All right, 'tis the season. What is the Santa Claus Rally?
Yeah, the Santa Claus Rally normally is a trend that we're seeing that starts about the week before Christmas, lasts a couple of days throughout the new year. And generally, this trend has shown us that the markets tend to overperform in this 2-week period of time. However, we're off one of our worst weeks we've had in quite some time. So I think the Santa Claus Rally, if it's going to be true this year, might have a little late start. And yesterday was a good start for that rally. However, with the Fed basically cutting rates this week and announcing that they would cut rates a little slower next year, it's caused the market to have a little bit of a pause and figure out which direction it wants to go. But generally, if we go back to 1950 to today, what we've seen is that rally has been true about 80% of the time.
So what do you think is the biggest investment takeaway from this trend? What should we do?
You know, one of the takeaways is one, I want to caution you. I feel like what I just said would encourage people to time the market. Timing market's not a proven strategy. If we go back over the last 30 years and you've missed the best 10 trading days of those 30 years, your portfolio would be basically cut in half, which is really the difference of a successful retirement and a not successful retirement. So I caution people to not time the market, but I do basically encourage people to have more conversations with their advisor, to do more research, to figure out how these trends can be utilized in a better overall investment portfolio and retirement plan.
Hey, Stu, before we go here, what questions should investors consider this holiday season? And for anyone watching that's new to investing, wants to get involved, what do you recommend for them?
Yeah, the first question I would ask is how much risk are you taking in your current portfolio? Not many people understand what type of risk that's embedded in their portfolio. So oftentimes we're meeting with these people, they come into our office, they think they're conservative, and then we do a stress test of their portfolio and we said, hey, you know, your portfolio has the potential to lose 25, 30, 40%, and they're shocked. So the first thing I would look at is the risk. And then if you start determining that you're over risk, is how do you diversify the risk? How do you break up the correlation between your portfolio and the S&P 500? So risk is very, very important to manage. Diversification, I think, is something that's key, but most often mistakenly done incorrectly. It's almost like you're decorating your Christmas tree. You wouldn't put all of your ornaments in one part of that Christmas tree. However, the investment universe is way bigger than you actually think it is. So you think your investments are diversified, but if you step back, you know, a lot of your investments are in one part of the market. So diversification is key. The second question I would ask is how do you control it? And you can't control the S&P 500. You can't control when the markets will go into recession. But what you can control is you can control how your portfolio reacts. You can control how much taxes you'll pay. So we work with a lot of our clients to reduce taxes, to help with volatility control. So if you've got questions, if you're just getting into this, or maybe you've been doing this for a long, long time, we've got many of these resources on our website, openairadvisors.com, and that can really help you walk through this time that we're experiencing, what the Fed's doing, potentially maybe use the holiday rally to your effect, but really go to openairadvisors.com. There's some really good resources there.
Right. Well, Stuart, I might be reaching out. Still got some questions for you as well. Thank you so much for joining us, Stuart with Open Air Advisors.
Thanks, Cleo.
All right. Thank you.